Things. Okay, so good morning, everyone, and welcome to today's SMS. So we'll now hand over the mic to Arpit for introducing today's speaker. Arpit over to you.
Thank you, Rumji, and a very good morning to all. And today's speaker we have Deepak Kothari ji, and he is a fellow chartered accountant and a practicing company secretary. He runs a consulting company in names of Positive Advisors Private Limited. He has completed his graduation from Bhagwan Mahavir Jain College affiliated to Bangalore University, and presently is supporting clients in business setup, audit assistance, indirect tax advisory, due diligence, and secretary compliances. He has also appeared before the NCLT for different matters related to company disputes and winding up BOS. He is presently also faculty at ICI BOS for indirect taxation. His recent endeavor has been authorizing a book on ICSI company law, exploring procedural dimensions and taxation on online gaming industry, published by Taxman Publications. Over the past 15 years, his experience encompasses regulatory advisory, assistance, and compliance across multiple industries. He has presented papers at various forums like Wellingker Institute of Management, NASSCOM, ICI, ICSI, and all the other institutes. And presently, he has come today on the platform of SMS for delivering his views and sharing his views on Section 39. And I think that, as always, what we have thought that the section does not have many intricacies, he would be exploring new avenues in Section 39, which will allow us to run our brains and have a brainstorming session today. Handing over session to Deepak ji.
Thank you, Arpit. Good morning, everyone, and thank you for this opportunity to present among all the faculties this topic, which looks like a very simple topic, that what could be in a return section. Just a return has to be filed, but this is a breadwinner for most of us, because few anyone who does GST should be knowing returns, and many consultants are relying on the return filing also. Could be manually, could be automation or any other software, whatever. But Section 39 is the place where we all have to come to at least start the compliance process. So thanks again for this opportunity. So we'll kind of there are two things in this. One is the section itself. More than the section, there is a rule and the forms. Starts with Section 61 and it goes up, Rule 61 and goes up to Rule 67. But our objective here will be, at least for today, in this short span of time, we'll discuss Section 39. What are the intricacies or what are the nuances under the section, which we'll have to look into it and kind of come up with our interpretation. So we'll kind of stick into Section 39 itself. Of course, there is rules and their forms, but we'll try to cover it up in a next session. So returns per se is covered under the chapter 9, wherein it starts with Section 37, where you make an outward statement, and we have discussed that 37, 38, and now we are coming to 39. And 39 is a return of a statement, whatever we have filed under 37 and 38, and then we kind of make a consolidation of it. And in this return, you have statement or details of your outward supply and inward supply and the payment of tax. So there's been a lot of patchwork happened in this section, to be really frank, that it started with returns. Returns started with what is called as GSTR 3, and then they brought in a stopgap arrangement recognized in the GST Council also. They said that no, we'll bring in something called as GSTR 3B. Let it be a simple return, and once GSTR 3 is ready, we'll kind of plan up to come to GSTR 3. But GSTR 3B was so well versed and everybody was comfortable with it, and GSTR 3B became the return. And with the amendment in the law, that's why I'm saying patchwork, that the law got amended. They said no, GSTR 3B itself is a return. People went to the High Court, reached the Supreme Court also in case of LC Infra, in case of AAP and Company. And then latest one, which was decided by Bharti Airtel, saying that no, GSTR 3B is a return, and GSTR 3B was made a return there. So the government was consistent that yes, whatever we are saying, we will kind of abide by it and we will say that this is the law. Even if the Supreme Court decides otherwise, also they would have made a retrospective amendment somewhere. So 39 is that it has gone through various phases. So in today's context, what is I just made a summary of 39. This we are all aware of, but just to give a starter kind of a thing, that 39 read with rules says what are the various returns. Like 39.1 says a taxpayer has to file a regular return in GSTR 3B. And the same 39.1 itself also says that for a person who is a regular taxpayer and who is under QRMP, he will also file GSTR 3B. The duration would change. Then 39.2 says for a composition taxpayer, he has to file a return in such form and manner, that such form and manner is GSTR 4. Then composition taxable person, how he will make the payment, that will be through CMP 08. So this is what we all know. I'll not get into this, but just giving you a summary of it. Now, what I've done is I've given few scenarios and we'll kind of discuss, because those scenarios are restricted to subsections under section 39. We'll deliberate on those sections and then we'll see how do we take it forward. So we'll start with few scenarios. Filing nil returns. My scenario is simple. There's a trader who has no transactions in a month. Now, is he required to file GSTR 1 and 3B? Our general notion is that yes, in the portal, we see that every month we have to file the return, but where is the legal backing for it? That is what we are trying to identify, that when there is no transactions for a trader in any month, should he file his GSTR 1 and 3B? The background or the documents which will be required to evaluate this is section 39.1 with section 39.3, because there is something important in 39.3 which is missing in 39.1. So from that perspective, do you still feel that your answer, generally what we say yes, will it stick on or no? So I'll kind of reproduce the section 39.1 which says that every registered person other than an ISD or a NRTP or a person paying tax under 10, 51 or 52 shall for every calendar month or part thereof furnish a return of inward and outward supplies, ITC, tax payable, tax paid, and such other particulars in such form and manner within such time as may be prescribed. Now, when you contrast this with section 39.3, 39.3 says every registered person who is required to deduct tax at source under 51 shall electronically furnish a return for every calendar month of the deductions made during the month in such form and manner and within such time as may be prescribed. So, the point what I'm trying to bring here is 39.1 says that you have to file a return for every calendar month. And 39.3 also says that you should furnish a return for every calendar month. So then why was the question, or why did people not file the returns of TDS in the month when there was no deduction? So there was some kind of interpretation which came up from 39.3 and people started saying that no, I have no deduction for this month, so I will not file a TDS return. Because the wordings are same in 39.1 and 39.3, both it says for every calendar month. So then even if there's no deduction for a month, they should have deducted. So they were not deducting. That's when the proviso came in 39.3, which says that provided the said registered person shall furnish a return for every calendar month, whether or not any deductions has been made during the said month. So which means they are emphasizing that even if you do not have any deduction for a particular month, you will still have to file the TDS returns. Now, such proviso is absent in 39.1. So from this background and just analyzing these two sections, do you feel that this proviso is missing in 39.1? So a person who's not having any transactions, no inward supplies, no outward supplies, he should not file a return?
When was the proviso inserted?
This was 39.3. This was in 2000. The whole section itself got amended, and this was from 2024. Finance Bill 2024.
I still feel the returns needs to be filed under 39.1. The reason being 39.3, if you see the wording of the deductions made during the month, the deductions is the only one criteria which was the saying. That's why they have inserted a proviso saying that if it is though no deduction, you have to steal a furniture return. Whereas in section 39.1, you see there has been a multiple details they have to mention or such other particulars in such form and such manner. That's why that is a very broaden kind of scenario. Even when there is a no transaction, you have to still intimate to the authorities that there are no transaction. That's why I feel there is no need of a proviso under 39.1, and 39.3 proviso is rightly correct, provided that because month of the deductions, if no deduction, no return. So that's why they have clarified that.
Okay. But what could be, I agree that there are the 3B, the scope is wide. Say the person is not doing any transactions, he's not doing any inward, outward supply, such other particulars also. There's no kind of interest also is earning. Maximum a worst scenario wherein people get interest and they will have to report it under no supply cases. So even that he does not have. And there is no reporting because you're saying that in every month of the deductions made, and here it says in every month of inward and outward supplies and other details. Now he does not have these transactions also, and it is literally a 000 return. So in that case, will your answer change?
No. Even zero has to be reported.
So then we are contradicting. Let's take it in a proper way that if zero also has to be reported, then a person who is deducting tax, he should also report zero deduction then.
No, I am reading it inward, outward supplies, input tax credit, tax payable, tax paid, and such other particular. Such other particular gives me a broader thing. If no particular, still I have to inform them that there are no particulars. Whereas in the 39.3, the language is very specific. Deductions made during the month. Only one thing I have to see deduction, whether I have deducted or not deducted. If no deduction, then proviso will operate. That's why I feel there is a distinction between 39.1 and 39.3.
Okay. Any other views?
Deepak, the amendment, what was talking here,
Hmm.
earlier amendment was like for the month in which deduction has been made, right?
For the
Uh,
month in which deductions have been made, yes.
prior to the amendment, if we read that 39 subsection 3, it was just, I'm reading again, every registered person required to deduct TDS under the provision of 51 in such form and manner as may be prescribed for the month in which such deduction have been made. So I think that got substituted, no?
Correct. That got substituted and the provision also is inserted.
Was
Both.
added.
Yes,
Yeah.
both.
Yeah, so that's why the month in which the deduction was made, I think that got substituted with for every calendar month of the deduction made during the month.
So
can
earlier
we
it
just-
read
yeah,
a return for the month in which such deductions has been made. So they have changed the word now, and they are now saying that made during the month and a provision.
yes. So will that give some different meaning to this?
So if it gives a different meaning, then the proviso was not required. Now, if proviso is also inserted, it looks like as a abundant caution they've included the proviso also.
I have a point to discuss.
Yes, sir.
Okay, so little out of context. I'm just looking the reason for this proviso. Maybe again Gurjit or someone can explain what happens. Let's say January, February, there was no deductions and I have not filed any TDS return. In the month of March, there was a TDS deduction. I filed the TDS return. But later it was discovered the Jan-Feb accounting issue, there was no accounting properly done and there were deductions. Now, I should go back and file. I don't know. I have not explored filing a return backdated for a month after which it was done. So were there a technical challenge in the system or not? I don't know. Because the concept of amendment or correction can happen only when there is a original data which is entered. For example, in GSTR1, table 7, B2C supplies, if you have filed it as 0 and you have submitted, any given point of time, you can go back and amend that value to any number. But if you didn't even open the table and you just submitted the return, that means for that period, you can never go and amend the table 7. Even though you have said that you have filed, since it was a null, there is a difference between null and nil. So nil can be amended to any value, null cannot be amended. Was that a reason, something similar to that, and the reason for insertion of this proviso? I don't know. I'm just making a guess and making a statement.
But the reason why this was amended to say that even if there is nil transactions, you have to file is so that the government knows that for the period there is no transactions and you are declaring that there is no transactions. Otherwise, what would happen is pre-amendment, you did not have any deductions for this month, you will not file any returns. So your scenario is whether you are a non-filer are non-compliant, or you're filing no returns because there is no transactions, or it's a non-compliance. That would not be known. I think that is the reason this amendment has happened and the provision has been brought in, saying that any transactions, even if there is no deductions, you will still have to file your returns. Okay. Now, the question here is on a material reading of these two sections with the absence of proviso in 39.1. Will it make an impact or no is the primary question here.
Yeah, so Deepak sir, your initial question that what was the difference, that is answered by ma'am, that if we have to look into the section that is before the amendment. So before this amendment, which the proviso was also inserted by the same amendment. Before it was that only where the deductions has been made. So that makes it very clear that GSTR 7 has not to be filed sequentially. It has to be filed only when there is a deduction. So that answer is answered by ma'am there. Now the second part, that whether the proviso is required, whether it is as a matter of abundant caution or whether it was required at all, that question remains. So in my view, we can I can just say that yeah, it may be that as a matter of caution only, or just because the earlier practice was that the deductions, only when deductions were being made, then the return was to be filed. So most of the deductors were used to that practice. Just to highlight that the proviso was also inserted along with the amendment in the section. So the proviso is not a separate insertion. And to respond to Venu sir's query, sir, Venu sir, I really don't remember what was happening earlier, whether for the gap period, whether the GSTR 7 could be filed. I really don't remember that, whether it could be filed. Yeah, now of course it cannot be filed. For that earlier period, I don't really remember.
No, yes, Buller sir,
Noted, sir.
actually,
Thank you.
Gurjit sir. Yeah, Gurjit sir, actually what Venuji said, that's right. That was a precise problem that the government authorities were facing. If they have not filed a return and now they realize that they have to deposit a TDS for a previous tax period, they could not do it. So that was the demand from the trade, that let us be, let us have this thing that, even if there is some revision to be done, let us be allowed to do it, even if no return is filed. So then they came out with this idea, no, that cannot be done according to the back-end metrics and all, because of the software restriction. So that's when they came with the idea, no, even if you don't have an entry, submit a nil, so that zero, as Venuji has wonderfully put, there is a difference between nil and null. So if you put a nil, you can always go ahead and amend it. So बाद में आपका कोई problem नहीं होगा.
Dhruv ji,
हाँ, अर्पित जी
Hello.
बोलिए.
हाँ, The question with Deepak ji has said I have searched through the FAQs which were released by GST on TDS. So for 39.3, they have said that since a return is required to be filed for every calendar month of the deductions made during the month. So if there is no deduction, it is not required to be filed. And secondly, how come 39.1 is mandatory? If we go through section 39.10, it says that unless until the previous return has been filed, subsequent return would not be allowed to be filed. So therefore, in my opinion, 39.1 has to be read, the mandate for filing a nil return has to be read through 39.10, if I am correct, for filing of returns, even if it is a nil for 3B, and for 39.3, since there was a specific understanding of the lawmakers also that only for the month for which the deductions are there, return is to be filed. So therefore, they have brought in the proviso.
Yes, yes.
So you're right, 3910, and I think that's why I didn't bring up the main section. Apart from 3910, there is 39.8 also, which says that every registered person who is required to furnish a return under 1 or 2 shall furnish a return for every tax period, whether or not any supplies of goods or services have been made. So 39.8 and 39.10 gives the resolution that yes, for a transaction which in or a month in which there is no transaction, still you have to file a return that is coming from 39.8. So if you just leave away this 39.8, that was my primary contention, that if you leave away 39.8, then if you just read 39.1, had there not been 39.8 in the law, then 39.1 does not have a power to tell or to tell someone that you still have to file a nil return. So independent reading of the section of 39.1 and 39.3 gives the same meaning, that if you have any transaction, or then you file it. If you do not have any transactions, then you're not supposed to file it. But 39.3 has a provision. Now that provision gave power to 39.3, saying that yes, if you have nil transactions, such proviso is missing in 39.1, which means you will not file it. But to the rescue of 39.1, we have 39.8, which says that in any month, if you do not have any transactions, still you have to file the return. Yes, 39.8 and 39.10 was there from day one itself, sir. Arpit, hope I'm clear here.
Yes, Deepak ji.
So consolidated reading of 39.1 and 8 gives them the power, gives the power under the law that you have to file a nil return even if there is no transaction. Can we move to the next scenario?
Yes.
So rectifying mistakes in returns. This is not a major discussion, but I'll just bring it up here. So when a mistake is found in the returns file, we have to make the corrections in the return in the month when it is identified, subject to an outer limit of 30th November. Now, so if there is any mistake in the returns, right, it doesn't say what mistake, it says any mistakes. So if I have any mistake wherein I have paid excess taxes in any of my previous months, and now in a second month, I have identified that I have paid excess taxes, I have to reduce it. Okay, the return is wrong, not the documents, the returns are wrong. Now the returns has to be corrected. Now that correction will happen in the second month when I have identified it. Now, since the section says that any correction can be made, then technically the section is allowing me to make a negative correction also, saying that I have paid excess taxes, I can make the correction in this month. But does the return actually allowed us? Now it will allow us because now they have brought in this negative liability statement in place. But prior to that, did the portal have the power to stop you from filing negative values? I will bring up the relevant section here, 39.9, which says that where any registered person after furnishing of a return under one subsection 1, 2, 3, 4, or 5 discovers any omission or incorrect particulars other than a result of scrutiny, audit, inspection, or enforcement, he shall rectify such omission. The lateral part will come in the next question, but here it said that you can rectify such omission or incorrect particulars. So what was the stand prior to this insertion of negative liability in the returns?
One point again. Will incorrect particulars will not include omission? Is it necessary to be there, or it was an abundant caution? It is like non-reporting versus wrong reporting. Would wrong reporting include non-reporting?
Technically, yes. Wrong reporting would mean, according to me, even non-reporting also. So incorrect particulars would have covered that, but they have also used the word as omission also.
So the incorrect particulars could be lower reporting, excess reporting, or cross reporting, either of it.
Correct. So technically, the blocking of the returns, the portal, which was not allowing the returns to be rectified, was incorrect, because there was no such restriction under the section which could, block anyone to file a negative values. Or is there any other provision which allowed the portal to kind of block it?
No, there was no such provision.
So
It was basically GST law presiding over GST law.
correct.
So now the incorrect return and your example of I paid extra, which I will be using in the next month. We have provision in 54 for taking a refund of the excess payment of tax. Right? Is it a choice, or is it an order that needs to be followed, a particular manner and the order in which we have to follow? What is your view on it?
So you have two provisions. One is 39.9, which says that if there's any mistake, then you can kind of rectify in the subsequent month's return. This is one provision. And 54 says any excess payment of tax, we can claim the refund. So I think this is a choice wherein you can do either this or that. So there are two options, and no kind of which one will override the other one.
Deepak ji, here one query that in case a person has taken excess ITC in earlier month's return and he found it later on, then has he to reverse that, or he can adjust it? Because if it is a correction, he can, I think, deduct that from the any other ITC of the current month. Is it a correct scenario, or he should reverse that under that reversal table?
See, that reversal is all coming under the rules, right? But if we read this section, its section is saying that you can rectify it, and it doesn't restrict to outward supply, as you rightly pointed out. It also refers to any particulars, right? Any particular, the word uses any omission or incorrect particulars. So when you yourself have found there is a mistake in your ITC.
So in next month ITC, I will take after reducing the excess ITC. Because you know, sometime department says that you have not reversed, you have taken the excess, you have not reversed it. Show where you have reversed it. This is the point basically.
Correct. So when you come to a practical point of view, you'll have to then read the section along with the rules, and where the rules say that you will have to do a reporting of the claimed reversed, then you will have to do that reversal and show it separately. But if you have to, you're see, we are going at a case where you have done this. You have already kind of claimed excess. Now you have claimed next month lesser to that extent. There, your defense will be that 39 says that I can do a rectification. So your defense here will be that 39.9 says that I can do a rectification. So I've done this.
Because department's view can be fatal in this case. They will take on the assessee on two count. First, they will say that you have not reversed that amount, and second, they will say that in the next month when you have availed less, no, you cannot avail that. When audit comes, na. So these type of things can create problem from the taxpayer. That
will definitely crop up, yes, because rules and the guidelines says that yes, there is a separate return, there is a separate column. So this is what every one of us are facing. That can I? The other related question will be that when there is a reversal which is to be done, can I report net of transactions, or should I report gross and then do the reversal?
Sir,
that is
Sir, in my view, if you go through the circular which was issued for in July 2022, that how GSTR 3B has to be filed. In that circular, in para number 4, it has been stated that multiple practices are being followed by the taxpayer, and to bring in harmonious approach, a common approach for filing of 3B, this circular is being issued. So that circular itself is very clear that all the practices which were being followed are not incorrect. If that would have been the case, then they would have specifically put in, because we had many notices being issued on that part. What you are not specifically reversed on circular number 29 and circular number 170, if I'm correct, for July 2022, wherein we specifically said that how the credit has to be reversed and claimed has only been provided by that circular. And prior to that, if all my practices are resulting into the same result, whether I am reversing on a net of basis or showing it separately, if they are resulting in a net of basis, that circular is not saying that all these practices were incorrect, because there was no specific guideline that how return has to be filed. Secondly, whether I can claim net credit, that would be sufficient. So if we go by rule 42 or 43, they said that reversal has to be added to the output liability, and that part never came through by GST 1, 2, and 3. So technically speaking, it's a department fault for not bringing on the utility for showing the reversal separately. So if even if we are showing a net of credit, that is sufficient. And there is another Gujarat High Court decision in case of Pratim H. Desai, if I remember correctly, wherein what had happened, that the assessee had claimed excess credit, and that excess credit was shown as an output liability. The reversal of that excess credit was made by adding to the output liability as a B2C sale. So department asked for further reversal, that we would not be treating it as a reversal since you have shown in output liability. Honorable Gujarat High Court in that case specifically said that if the net result is same, that whatever has been claimed as a credit has been added to the output liability and paid as a B2C supplier, therefore no demand, no separate demand should be there for again reversing the ITC.
RPG, you are right. Actually, if we don't have any ITC equivalent to our reversal, then it automatically goes to the add to our tax liability, output tax liability.
Yes.
That is from day one. That scenario is from day one. So,
Yes.
RPG, I will kindly request you to kindly mention this circular and this case law in the
Yes,
chat.
definitely.
Please.
Yes, I will share that.
Then we will study it after this session. Thank you.
Okay.
Deepak, one more point.
Yes, sir.
So now the definition of incorrect is nowhere given. Because only when we know what is correct, then we can tell what is incorrect. Till the circular came in, it is kind of silent. So net result, if I have to, after final net effect, if I have to take 5 rupees, I have taken 5 rupees, I have to pay 7 rupees, I paid 7 rupees. Now the question on little context. In an RCM, I will be showing it as a cash payment in the same month, showing as an ITC in the same month. If at all, the net cash that needs to be paid during the month, including RCM, is being paid. Can it at all be claimed saying that yes, even that has been done net? I was supposed to show here and pay in this way, but I have shown it something wrongly. Eventually, what has to be paid as a cash to the government has been paid. So RCM has also been paid, but not presented. Can the argument be taken?
See, we will generally take this argument where on various grounds, but few grounds what I can think of is where the value is substantial and you have already made this disclosure. Now your best chance is that you have to defend it. So when we are going under the defense route, then we will definitely argue that revenue neutrality, it's a procedural aspect
I
that
am not
have
talking
disclosed.
revenue neutrality. I am
This is
saying that the
procedural.
taxes needs to be paid has been paid.
Okay.
See, I am not saying that it is revenue neutral. I am saying the taxes have been paid. But there was an error in presentation and representation in the 3B because it was kind of not clear. We didn't know what to do, how to do. So in the absence of definition of a correct and incorrect, can that be a ground?
I think it can be a ground because, as Arpit also has highlighted, that the circular itself has said that there are various ways how the trade was practicing, wherein it is there acknowledged that there is no correct way which is being specified. So whatever I have disclosed, I instead of showing it under column B, I've shown it under column A, and my total liability is correct, right? Including my RCM liability, I've paid it correctly. Then the onus will now shift to the department saying that no, what you paid is incorrect. So when I have a defense saying that yes, I have paid the liability correctly and my payment is correct, my disclosure in return is incorrect, I would say you can still defend it saying that since the total outward which has to be paid has been paid, it is still correct.
RPG, your view on that? Because this is a little far-fetching argument. So anyone wants to counter, comment anything to this?
No, I think we can move ahead, I think.
Any thoughts from Gurjit ji?
No, sir, please move ahead. We can move ahead like
Okay, fine. So with this section itself, now in this section itself, so now what we are doing, if there is any amendment or any correction to be done, we are doing in the subsequent months GSTR 3B return, of course, up to an outer limit of 30th November. Now there is an amendment which says that any rectification shall be made through a form to be prescribed. But however, such amendment is not notified, but this amendment has come in wherein they will say that any amendment should be done through a form. It says that incorrect particulars in such form and manner as may be prescribed. So this is amended in the section, but this is not yet notified. So whenever this gets notified, so it will be through a amended return. Like how what I'm anticipating is GSTR 1, any amendment in GSTR 1 can be done through GSTR 1A. So something like that, wherein GSTR 3B is there, any amendment will have to be made through a GSTR 3BA return or something like that, is what I'm anticipating. But however, I think a separate discussion, but a passing reference here which can be made is that if there's any mistake in the returns, and even if you have realized it after 30th November, can that be rectified or no? There are 2 to 3 case laws. One is Deepa Traders Madras High Court, which has relied on Aberdare Technologies, and they've said that the assessee should be enabled to rectify the clerical errors, wherein the argument from the department was that no, our portal is binded and things, it's a software. There the court said that the software cannot be a binding thing, or it cannot take away a right of a person to rectify a manual return, wherein there was an error in the GSTR 1, and they've said that some correction has to be made in the manual entries, whatever mistakes you have made, that has to be corrected. They said no, you will have to still allow it. And in the Patna High Court's case, in case of Om Traders, it's not Om Traders, they've said that GSTR 3B is incorrectly filed, but my GSTR 1 was correct. They allowed that yes, your GSTR 3B has to be rectified. You should allow the assessee to rectify the return, is what they've said. So Arupda, do you want? Yes.
Vivekji, as you have said that the amendment in such form and as manner as we prescribed, that has not been amended. And if we go through the previous, what was there in the form and such manner as we prescribed,
Prior to this, it was subject to the provisions of 37 and 38. In such particulars, in the return to be furnished for the month or quarter during which such omission was observed.
yes, Deepakji. So
Yes, sir.
this is the amendment in such form and in such manner as we prescribed. The previous thing which previous word which was there in the return to be furnished for the month or quarter during which such omission of incorrect particulars are noticed. And the next is in the proviso if we see, provided no such rectification or omission incorrect shall be allowed after the 30th day of November. This amendment has been done. But the end of the financial year to which such details pertain. This is again the amendment which was there, but it has not been made. And prior to that, the only wordings were the end of the financial year. So the restriction of to which such details pertain has not been notified as of now. And whatever decisions which are there, they are reading the amendment which has not been made till now. So if we go through the language which was there previously, the amendments can be made in the month in which they are noticed, and the outer limit of the end of the financial year would be applicable from the day or the month in which it noticed, because the restriction of to which such details pertain has not been amended till now. Previously, the wordings were to the end of the financial year. These were only the wordings. To which such details pertain are yet to be notified. So what we normally think is that if I have noticed an error of 2020 to 23, it can at best be made by 30th day of November. Because it says 30th day of the November following the end of the financial year to which such details pertain. This is, in my opinion, an incorrect version, because it says 30th day of the November following the end of the financial year. This is the only language which is there in the law at present. And 30th day of the November following the end of the financial year, which will be taking its color from the main provision, wherein it says that the amendment has to be made in the month in which it is noticed. Because the amendment in such form and manner as we prescribed has not been notified till now.
So what you are trying to say is, as it reads today, 30th day of November following the end of the financial year would
Which
be
it is
the,
noticed.
to which such details pertains is not there now.
No. So if
So-
I see a mistake of say 1920 and 2023, or
Right,
say 2024,
right,
so the time limit for making the correction would not be of 1819 or 1920, to which such details pertain. It would be from the year in which is noticed, say 2024, so it would be applicable for November 25.
that is little far-fetched. Do you
No, it is not far-fetched.
Yeah, the wording, what you're saying,
Maybe
right.
we'll be taking section 39 in the next session. So we will read the session. We will read the section in the language in which it is present as of now.
Right.
नहीं अर्पित जी मिस्ड यू इन द मिडिल एक बार थोड़ा और एक बार बोलेंगे सॉरी थोड़ा मेरे नेटवर्क वो था इशू था द लास्ट पार्ट
है?
आपने जो बताया जो लास्ट जो पार्ट आपने बताया ना उसको एक बार थोड़ा बताएंगे और एक बार वंस
तो देखिए section 39(9) in its main provision says that the correction can be made in the month, in the return for the month in which it is noticed. So
Right.
the main provision is saying that you can make the correction in the month in which it is noticed. The proviso is restricting to 30th day of the November of the next financial year. So
Okay.
when it is saying of the next financial year, it is not restricting itself to the financial year to which such details pertain. This amendment of to which such details pertain is not notified till now. It was brought by CGST Amendment Act 2018, but it has not been notified till now. So in the absence of the word to which such details pertain, I would only be connecting the proviso with the main section to which to the return in which is noticed, and it would be the outer limit would be 30th day of the next financial year in the year in which it was noticed. So if I have noticed the error of say 1920 in 2024, the limit would be not be 30th day of 30th day of the next financial year 1920. It would be 30th day of the next financial year of 2024.
Okay.
Because the restriction of to which such details pertain is not notified till now. And whatever decisions we are reading through of the high courts, they are regularly producing the amended provision without seeing that whether at all it has been notified or not.
That is one part, right? But if I'm doing an amendment for a outward supply, then the person who is availing the ITC, he will get blocked now by 16.4. Suppose
No,
I'm
I am
increasing
not
some output
talking
tax.
about 16.4. I am not talking about 16.4.
No, I'm saying if
I am
I'm
talking
increasing
about
say I made a mistake in output tax and I'm increasing that output tax in the next financial year, next November 26 maybe. So in that case, what will happen? The person who is availing the ITC, he will not be able to get that extra ITC.
Dhruv,
So if we read
what I
in
am trying to
congruent,
say, what I am trying to say that 16.4 it is still next financial year to which
yes,
the ITC pertains. But in
yes,
39(9), I can make the amendments in 3B. It is
right,
not restricted that I can make the amendment in 3B up to the next financial year to which such details pertain. I can make the amendment
okay,
in 3B in the year in which I have noticed, and the outer limit would be 30th day of the 30th day of the November of next financial year in which such discrepancy was noticed.
I think this is a good observation that about that notification not happening.
RPG,
Yes, sir.
here one thing is very important here. 16.4 may not be made applicable here because if I say that I was having the ITC with me in the books, but inadvertently in the column of ITC world, I made a mistake there. It was to be written 1,43,000 and I written only 43,000 only. And this mistake I discovered 3 years later. And then should we be able to take that ITC credit in the garb of that it was a rectification mistake?
That can be made a ground. I am not saying that it would be a favorable ground, but yes, that can be made.
That can be made a ground, sir. That can be made a
Yes.
ground. Thank you, sir. Thank you.
So Arpit, what you're saying is, if there is an outward supply,
May I,
it will
sir,
not make a
Deepak, sir?
Yes, sir. Please.
So,
Just 1 minute,
Arpit
sir. Just 1 minute.
yes, sir.
So,
Please carry on, sir.
Arpit, sir, what you're saying is, for an outward supply, this will not impact, whether it is end of the financial year or end of the financial year to which such details pertain, because in either case, you will have to make the payment of interest, right?
Yes.
So only in
But
case of
what I'm trying to say is that many a times department says that we will not treat that you have made the correction since it was not made up to the next financial year. I say that unless until I may not know that how it will be benefiting us, but at least whenever we are making, we have to know that the amendment on which the department is harping that the amendment is limited up to next financial year, it is not made till now.
That's fine, but the net impact of this will be that if not through the return, then you will pay it through your GSTR 3B. You will pay it through DRC 03. So
Let's
for
take an
outward,
example that let's take an example that I had to pay an RCM in say 2021. Now I am ready to pay, and there is a circular that I can claim the credit. I can claim the credit. So I have claimed the credit in 3B, but now the department says that you have to pay the RCM by DRC 03. I say that if I am paying through DRC 03, there would be mismatch of payment and claim of credit. So department says that you cannot pay it through 3B because it is restricted up to next financial year of November. So I can always say that I can pay it through 3B, whether it is for say 18-19 also, because I have noticed it till now. I have generated the invoices now. So I can pay through 3B and claim the ITC in 3B without paying through DRC 03.
okay, so there it could be a savior that they will also be happy that it is matching with your output and input.
Yes.
Fine.
Yes.
Got it. Okay.
So,
Sorry,
Arpit,
Gurpreet.
sir,
Sir, sir, I have two questions over here.
Sir, hello,
So the
Gurpreet
first
sir,
question
to
is like,
confirm. He wanted to just talk something. Yes, Gurpreet sir.
may I, Parveen, sir?
Yes, sir.
yeah, please, sir, please.
So, Arpit, sir, yeah, I totally agree with you that we should be reading the sections only as so far notified, reading them just because those amendments were inserted, though they are not notified, they give different meaning. And it is unfortunate that such readings are even creeping into the high courts, etc., and judgments. It is only a lack of, say, the court being made aware by the representing councils. But only thing I'd like to say when we are taking examples, yes, you're right. But only thing qualifying this is that there is a second part or the actual date of furnishing of relevant annual returns. So if we take the example that 1819 or 2021, so the second part has also to be read with. If annual return has been filed, so that will be it.
Yes, Gurjiji, what happens is that many a times we come supposedly the annual return for 17, 18, 18, 19, 19, 20. These were returns which were filed very late because people were not conversant.
I'm
And in many
totally in
cases,
agreement with you, but only
yes.
thing is that this is a
Yes, yes.
qualification which has also
Yes,
to be
yes.
considered while doing that
Yes.
exercise.
Yes,
Yeah.
yes. Yes, Praveen ji.
Yes, sir. Sir, like the discussion was that what could be the benefit out of this, like until it is being notified. One benefit could be that in case if excess output tax is paid, and let's say the time limit for claiming refund has lapsed, and let us also assume that this person is not liable to file any annual return, his turnover is below 2 crores. Then in such a case, let's suppose even if that excess tax is paid of 17, 18 or 18, 19, he would still be able to adjust that excess output tax paid in the current month's returns.
Yes, and subject to what Gurjiji said, that non-filing of annual return.
Yes, sir. And sir, another
Very
point
valid
to add to
Very valid
Yes,
point that it can be used there if an annual return has not been filed. Or if supposedly we are filing annual return, say now for 2021, because now there's a limitation of 3 years, and that 2021, 21, 22, say for which the 3 years have not expired, and we come across excess payment of tax, then we can adjust by 39(9).
Yes, sir. Sir, to add one more point to what you've explained, sir, that the example what you had given, that let's suppose there's any RCM liability which is missed and the department officials have pointed out, and now they are pressing on DRC 03, but we don't want to pay it through DRC 03 because there would be an ITC mismatch. So by 39(9), we are using this provision and mentioning that in the return. But the basic question is this, sir, that in 39(9), this rectification is permissible other than any result of scrutiny, audit, inspection, or enforcement activities, sir. So now in the example which was being discussed, that if any RCM liability is pointed out by the inspecting officials or any enforcement or scrutiny action, can 39(9) be used to rectify that, sir?
In many points, what is happening is that post Supreme Court judgment and post issuance of the circular, many taxpayers who have not paid the RCM, they are paying the RCM now. And once they are paying the RCM, so the issue which is being faced by them is that if I'm claiming the credit, there would be a difference between the payment and the credit. So if at all, what my issue is that if we are satisfying all the conditions which are there in 39(9), okay na, then we are very well eligible to make the payment and claim through 3B. There is no such restriction of next financial year November, which is being given at many of the places.
Understood, sir. So basically 39(9) is only when that omission or incorrect particulars is found out as a result of self-assessment.
Yes. That is it.
Yes.
Because scrutiny, audit, inspection, everything is carved out. So you will be left out with only self-assessment. Fine, sir. I think I have one more scenario to discuss, but we'll kind of, due to paucity of time, I'll discuss the scenario and probably discuss in the next session. I have two more scenarios to discuss. Can a GST portal block a return filing if the tax payment is not made? Right? Why this question is coming up is because 13(9)(7) says that tax must be paid before the due date, which implies that you can file the return and pay the taxes later on. 39(7), if I reproduce it here, it says every registered person who is required to furnish a return under 1, other than the person referred in the proviso thereto, that is QRMP, or subsection 3 or 5, shall pay to the government the tax due as per such return, not later than the last date on which he is required to furnish such return. So the act doesn't say that you have to pay the taxes along with the return. It says that you have to pay the taxes not later than the last day on which it is required to furnish such return. So a scenario could be that I am filing a return today, leaving the portal aside, the current portal aside. The law is permitting that you file your returns today and you can make a payment of taxes subsequently. Now, this return will be a valid return provided you have made the taxes, you have made the payment of the taxes before the due date of the return. So the law, according to 39(7), says doesn't bind the payment along with the returns. It says return has to be filed, and independently it says payment has to be made on a date which is not later than the last date on which the return has to be furnished. But there could be a counter argument saying that 2 subsection 117 says a valid return means a return when self-assessment tax are paid in full. But however, even with this definition of valid return, it doesn't preclude me from saying that I will file the returns now and pay the taxes by the due date of the return. Okay. So what I'm trying to say is, for a return which is filed without payment of taxes is a bottleneck due to the portal and not because of the law.
I think, Deepakji, thank you for bringing out this scenario. This is a very important discussion. And I think we'll continue this discussion in next week. So request everybody to kindly join on 6th of September. On 5th, we are celebrating the Teachers' Day. And on 6th, we'll be meeting again at 9 a.m. sharp to discuss on 39. So thank you, Deepakji, for this wonderful discussion today. Over to Arpitji for the final remarks and his vote of thanks.
Thank you,
Arpitji?
Roopji. Thank you, Roopji. And thank you, Deepakji, for this session on section 39. And as we say that the section might be a very simpler one, but as we go into nitty-gritties, we understand the section and how the provision has evolved over the period, as you rightly pointed out in case of 39.1 and 39.3, read with 39.8 and 10 and then 39.9, that although the section has evolved, but it has not been notified till now. And whenever we are having these discussions, the important part is that these discussions are somewhere stored in the back of our mind, and whenever we come across an issue and if we are able to link the discussion with that issue, it works for us. So it might be a case that whatever we are discussing might not be relevant as of now, but somewhere at some point of time we would be benefiting from these discussions, and all the faculties who have come till now have done tremendous job in exploring the various facets of the sections which we have discussed now. And all the participants, I, on behalf of all the participants, extends a very warm thank to you and all the faculties who have appeared till now and given their time. And looking forward for the second part of this discussion on next Saturday. Thank you very much, Deepakji.
Thank you. Thank you, everybody.
Thank you, Arpitji. Thank you, Deepakji, once again. And thanks to everyone for joining. So looking forward to next week. Thank you.
Thank you.